You look at the numbers. It's very interesting. I don't know if you saw the conversation that Barney Frank had with our own Mr. Wonderful here about effectively how hard it has been for banks to make money and potentially being regulated out of business, I think would be your argument.
That's exactly what happened.
You look at Bank of America's earnings. Do you want to own the stock?
I think you do. And look, the big theme in earnings season for banks has been net interest income. But the market's really missing half the story here. It's coming around, but there's a lot more to net interest income than just the yield curve. Yeah, the yield curve's difficult, but what we've seen and we saw today from Bank of New York and Bank of America, net interest margins have come in meaningfully lower than expected. So the rates are hurting, but they've been growing average earning assets, loans and securities. Balance sheet growth is offsetting that. Really, net interest income has been pretty close to in line, despite the NIM contraction. I think that's something the market needs to focus more on when it looks kind of bearishly at banks in a difficult interest rate environment. There's more to the story than just the yield curve.
Okay, if you could buy Bank of America, you saw Wells yesterday. We had Goldman Sachs. We had Citi. Who would you buy?
I'm a fan of the big banks
You're
for
like
a couple
them all.
of reasons. I do like them all. I mean,
well, my question is very factual in terms of numbers. Why has this sector underperformed the overall index for year after year after year if it wasn't for what Barney Frank did to them in regulation? What other reason is there that they have so underperformed and shrunk as a percentage of the S&P ever since they got regulated into oblivion? What happened to them?
Well, and that's been a big headwind, absolutely. But we're kind of to the point now where they've got the systems in place, they've got the capital levels built, and it's kind of factored into expectations. So I think when you look at forward earnings expectations for the big banks, where they have scale when it matters more now than ever before, and they're not as dependent on interest rates, I think that there's a case for better earnings growth, specifically in the Citigroups and the Bank of Americas of the world, that the market's pricing in. So those are the two I definitely like here.
And a Bank of America more than a Goldman? Because I would argue that potentially you could see Goldman break out long term if you think that the diversification of their business and this sort of new mix actually works.
I mean, it becomes a function of timeline, right? If Goldman Sachs makes the diversification work, it's going to be a home run. But it's not going to. We're not even going to get the strategic plan until next January. So that's going to be a longer time frame. And to the extent capital markets come roaring back, that's really good for Goldman too. But as I look at a B of A or Citi, I think you get kind of some exposure to the capital markets there. But I think a little more near-term potential for appreciation as opposed to longer term.
Jeff, thank you for your perspective this morning.